morning. You're listening to Insurance Matchmaking, your path to health, life, and Medicare coverage with Matt Libby Insurance. And now, sharing his knowledge, here's your host, Matt Libby.
All right, good morning. Welcome back to Insurance Matchmaking. Gonna hit a topic today that I don't know. I don't do it much. I'm usually focusing on Medicare or sometimes the under 65 health insurance. But just kind of reminding everybody, health insurance isn't all we do at Matt Libby Insurance. We also do life insurance. So do you really need life insurance, and how much? That's our topic today. So we're gonna kind of jump right in. And it's kind of funny. I like this. Most people, again, I've told you before, I like to use ChatGPT to kind of help me streamline what I'm talking about, because I can ramble on and just go down a rabbit hole. So this helps kind of keep my show a little more structured and not just winging it. I've done that enough times. But most people either over-insure, under-insure, or skip it entirely. So I think that kind of covers everybody. Except for the ones that properly insure, I guess. That's why it's most people. And all three of these can be costly mistakes, and it's costly, not necessarily for you, but for the people you leave behind. That's kind of what. So who actually needs life insurance? You likely do need it if you have a spouse, children, or dependents relying on your income. That's one of the biggies. The other thing is maybe you carry debt, and that debt's going to go forward, even after you pass. Maybe you have, your mortgage or car loans. You may be a cosigner on a loan. So those are some things that you may need to protect your heirs, is the easiest way to say it, your beneficiaries, your legacy, whatever term you would like to use there. But maybe you co-signed on those. The other one a lot of people don't think about is if you're a business owner with partners. And it gets it, and employees. Maybe, like in my case, I have employees. I have people working for me. I don't want my business to just end because I pass away. So I hopefully keep them employed. And life insurance is one of those things that can kind of help keep those things going. We're going to have payroll that needs to be met, rent that still needs to be paid. So some of those things. And again, somebody may, come along and decide they want to buy the business, but my spouse may need a little bit of extra cash to kind of keep things going there for a bit. So, so that's something to think about if you're a business owner. And just kind of going back to the partner part, a lot of times we can do what's called buy-sell agreements. Or and say we're not doing the buy-sell agreement, but the life insurance is a big part of that buy-sell agreement. So say you go into business with somebody, whether it's a lawn business or you're flipping houses for, in turning them into Airbnbs or flipping them to rentals, or just, I say flipping there, but flipping is what I kind of was getting to. Is like you go in, you get a fixer up, or you fix it up, put it back on the market. I was in a meeting one time, and a real estate agent says, what? He says, I just sold this one house, made a really big commission on it, but you know what I was when I woke up this morning? And he said, unemployed. Because once you get your commission, there's no more income coming in until you sell another house. That's one of the things I like about my business is there is residual income. I do get paid renewals on a lot of the policies I write. Now, not every policy. Some policies, especially, again, we're talking about life insurance. A lot of term life insurance policies, we get paid a commission on that first year's premium. And then for as long as you own the policy, you're still my client, but I'm not getting paid anymore. It's kind of like they feel they paid me up front to help you. So those are some things. But back to that buy-sell agreement. A lot of times what happens is you got two buddies, maybe they're two Army buddies, high school or college buddies, and they decide to go into business together, and they're running the business. Things are going great, and suddenly one of those partners passes away, and the surviving spouse has no interest whatsoever in being involved in that business. Well, now that business owner maybe needs to hire someone else to take over those partnership duties. And so what happens in that situation is with the buy-sell agreement is each partner insures the other one's life insurance, has a life insurance. They're the beneficiary of that partner's life insurance. And when they pass away, they now have the income to buy out that surviving spouse. Or it's just a matter, maybe there is no other beneficiaries, but now that surviving partner needs to be able to, like I said, hire someone to do be half of the business. So there's a lot of expenses that can come from that. And so those are some reasons to have life insurance. And again, a lot of people, I'm single, I don't have any dependents and a minimal debt. Yeah, that's, you may not need as much, but maybe you still want to make sure that you have something that takes care of, and I may be jumping ahead of myself, but what we call the final expense is that, there's going to be expenses. Funeral homes don't work for free. If you want to be buried in the family plot or something like that, you need something that covers that. And you may not have dependents. You may not have children, but you may have siblings. And unfortunately, again, debt can be passed on to relatives. Just because you didn't have dependents, your debts and your assets are going to go through probate if you don't have a will or estate plan in place. And again, those closest relatives, we've all seen the movies that, the long lost aunt passed away and now you own a mansion, but it's a money pit and you got to throw money into it to keep it going. And the reason I just bring that up is, again, when things go through probate, the court looks for heirs. They have detectives and people that do searches and find who's your closest relative, and sometimes that closest relative can now you can inherit their estate, but you're also inheriting their debt. So the other thing is, a lot of times people suggest is if you don't have dependents, you don't have a lot of debt, that you can leave a legacy to a nonprofit that you care about. And I say nonprofit, it could be your church, it can be, your religious institution, or it can be, people have left money to the Humane Society, or, like I said, if you have and again, this is one of those times when you probably want to talk to an estate lawyer. The easier way to do that is set up your estate, because sometimes naming a nonprofit as a beneficiary, well, there's no guarantee that, said nonprofit's going to be in business 3 years from now, 10 years from now. And if that's who you have as your sole beneficiary, you don't have any contingent beneficiary in your life insurance, that your money may not go where you want it to go. So that's, again, why it makes sense is you make your estate your beneficiary and then have the instructions in your estate plan that when you pass, whatever proceeds end up in your estate you can set dollar amounts, or you can set percentages of whatever you have and have that going towards where you want that money to go. So there's a lot of things that you can do with life insurance. And again, like I said, you can set a nonprofit as the beneficiary, or you can set an individual, or you can set it as heirs. So there's a few different ways. And I know I've talked to a lot of single people that, they kind of count their nieces and nephews as their children. They're very involved, but they've chosen to not get married and have children, but they very doting with their nieces and nephews. The other thing is, generally, you cannot name a minor as the beneficiary of policy, because the money would have to go in a trust for them until they are of age. So again, that's another reason to maybe consider setting up an estate, or again, you want to leave it to your nieces or nephews that their parent, your sibling, may be the one you list as beneficiary. I think there's a possibility you can list a minor as a beneficiary, but you have to have a contingent beneficiary then, which would be their parent. So that way, if you do pass before they turn 18, the money would go to the parents to manage or something. I can't remember. It's been a while since I've done one of those where they wanted to list their minor child. So I'll have to kind of look into that one again. But and then again, how much do you actually need? In the common rule of thumb is 10 times your annual income. So a lot of people think, I make $30,000 a year, or I make $50,000 a year. I think a $50,000 life insurance policy, or $100,000 life insurance policy, 2 years on my salary, that'll be great. That's typical what you would get from an employer plan. A reason I bring up employer, I always encourage people, if you have the opportunity, Because most of the time, if you have group like health insurance and they offer life insurance, a lot of times it's 100% paid by the employer, or sometimes they'll do a certain amount that the employer pays, and then you're able to get additional life insurance for a very low monthly premium. And I highly encourage people to get those life insurance because it's very inexpensive. The problem with that life insurance, though, is you don't own it. You're renting it. And if you leave that employer, that life insurance is gone. One of the things I've talked about in the last couple of weeks, I've been working with some people from a local manufacturer here who has downsized. They've actually had even done some layoffs. One of the first people that I worked with them actually came in because they were losing their insurance, and then came in this week. We needed to update some things, and he actually got laid off. So those are the kind of things. And if you're counting on that employer-provided life insurance, you get laid off, it's gone. It doesn't stay with you. So I always encourage people, yes, get what your employer offers, but then get a personal policy that you own, whether it's term, whether it's whole life, whether it's universal. We'll go into a little bit of those kind of things after the break. But just kind of going back on that 10 times your annual income. So if you're making $50,000 a year, you can justify getting a $500,000 of life insurance. That's just a starting point for the rule of thumb. I'm going to talk a little bit more on figuring out how much insurance you should get after the break. But I wanted to cover that part of when I first started in the insurance business with doing health insurance. And we were highly encouraged to add a simplified issue $25,000 life insurance policy to every plan, every health plan we wrote. And I did write some of those, but most of the time people, I don't have any kids, I'm not married, I don't, but the thing was, what we encourage people to do is if you don't have any life insurance, at least get that, $25,000 of life insurance. It was very inexpensive, it was like $10, $15 a month or less. And you had life insurance that at least if something happened, you had something to cover deaths, cover final expenses, especially, of course, I always use the phrase, I talk to the young people that, they think they're 10 foot tall and bulletproof. And I always tell them, get your life insurance now while you're young and healthy, and don't wait until you're old and round like me. So it was a good idea. It at least got life insurance on people to have some life insurance, but it's better than nothing. But $25,000 of life insurance doesn't go very far at all. So we're coming up on the break here, and then I will touch base on some of these income calculations that I mentioned, and we'll do that after the break.
This summer, Twin Lakes is turning up the excitement with a 10 Gig Days of Summer giveaway. That's 10 days, 10 incredible prize packages, and 10 chances to win big with a new prize featured every day. Enter June 23rd through July 16th at twinlakes.net. Winners will be announced on the Twin Lakes Facebook page beginning July 7th, with a grand prize winner revealed July 16th. Don't miss your shot at a summer full of big wins. Visit twinlakes.net to learn more. Lace up your running shoes and celebrate the 4th at the 28th Annual DeKalb Fiddler 5K, July 4th at 7 a.m. in downtown Smithville. Rain or shine, be part of one of the biggest weekends of the year during the Smithville Fiddlers Jamboree while supporting Upper Cumberland Habitat for Humanity. This timed race is also a qualifier for the Run for the Cumberland Medal Series, so bring your best. Run, celebrate, and give back to the Upper Cumberland Habitat for Humanity at the DeKalb Fiddler 5K. For more details and to get registered, visit uchabitat.org.
And now, back to Insurance Matchmaking with Matt Libby Insurance.
All right. Before the break there, I was talking about some ways to figure how much life insurance you need. Before I go into that, one of the things I did want to bring up, or a couple of things I wanted to bring up before instead of rushing to try to do them at the end of the show. One is, I've mentioned her several times, Insurance Matchmaking. If you go to insurancematchmaking.com, I have links to all my previous shows on recording. They're on YouTube, and I would love for everybody to go to that website and not just listen to some of the past shows, but when you click on one of those YouTubes, please subscribe. Also, leaving comments on the videos. If you watch YouTube, and if you follow anybody consistently on YouTube, you're going to always hear them say, please, subscribe, like, comment, smash the bell to be notified, all those things. Now, that helps me get followers, and it helps me get the word out of what I'm able to offer people. So if you're enjoying hearing me on the radio, please help me get the word out that there's a lot of people out there I can help. The other thing I have on that website, there is a contact form that you can fill in. And the reason I put that there was, to begin with, was if you have questions, if you have something you really would like me to cover on the show, that's a great place to put that information in, is fill in that box and say, hey, I'd like, or hey, I know so-and-so. I think they'd be a great guest on your show. Maybe send me their contact information, or at least let me know that you've reached out to them. Those kind of things. And then the other thing there is, again, if you need help, it's just going to come to us. Is that once you fill out that form, that's not on the website, so it's not going to be published. If you're if you have specific health or life insurance questions, go ahead and fill that out. So, and then please also go to my business page, Matt Libby Insurance, on Facebook. I love, people following there. Follow me on Instagram, and everything that expands my reach means there's more people I can help. So I would really appreciate you help me out there. The other thing I want to talk about, this is good news. This is not about me. This is about you. Is I mentioned a couple weeks ago that was getting another carrier. They have a lot of different plans, but one of the big ones that got me interested in the company to begin with is the dental plan they offer. I don't know, dental plans can kind of be the bane of my existence because dentists have networks. Some of the dentists are very picky and only take one or two plans. And when I say take one or two plans, they're only in network with one or two plans. The great thing about dental plans, they're PPOs. There's no restrictions on what dentist you can go to, but generally, if your dentist is in network with the plan, then the benefits of that plan are going to go further with that dentist because they have negotiated rates. Just like any other health bill you get, you see those EOBs, and you see, they billed $900 and the insurance approved $120, and they say, and you have $20 to pay as a copay of that $120, and they go, oh, okay, we agreed to be in network. That's what we're going to take. The neat thing with this dental plan, it just put it out there real quick, it does have a $100 deductible that will apply to cleanings. A lot of times, even plans that have a deductible, they don't apply to the cleaning and exam, but $100 annual deductible, and then the plan pays 80% up to your policy limit. And that can be from $1,000 to $5,000. Okay, and of course the price will go up from that $1,000 to the $5,000 depending on which level you pick. But it will pay, after that $100 deductible, it will pay 80% of the billed amount. Most of your other plans, they're going to, a lot of times, going to pay, they may not even pay 80% because with not being in network, we have what's, you may have heard me use the phrase usual and customary. That's typically the way PPO health plans would work, is if the doctor you saw was not in network, they would pay usual and customary, and that's all they would pay that provider. Well, with dental, it works that way too, is they would pay kind of usual or customary, or usually what their usual or customary was, if that was an in-network dentist, that's how much they paid for that procedure. So using, for example, getting your teeth cleaned, they maybe would pay $100 to $150 for your exam and cleaning and those x-rays. That's your annual limit on that, or that they would cover. Well, if you're not in network and that dentist charges $225 and they say we pay $150, you still have $75 to pay on that bill, and that's definitely more than 20% of those charges. So a plan that would pay 80% of that cost. Now, of course, it's going to eat away your annual benefit, but if you have a $5,000 annual benefit and your insurance is going to pay 70%, that helps a lot. You maybe heard me say this in the last couple of weeks. I just had a couple crowns done. I had to pay, I think, $300 and some after what my insurance covered. So give you kind of an idea, that was my 20%. So if you don't have any dental insurance, those bills are going to be very expensive. The prices on this plan are very competitive with other dental plans. But the thing I like about it, it pays 80% of the bill. Now, I've got a couple plans out there that'll pay 80% or 70% for routine stuff after you've like met the deductible or waiting period, and then you also have they'll only pay 50% on major things. This plan will pay 80% for everything until you've hit that max. So that's a great plan. Love to talk to you about it. And so if again, that's one of the things you can put into that comment form on insurancematchmaking.com, or you're welcome to call the office and get an appointment for that. Right now, I'm the only agent that's offering that plan. My other agents, I have to get appointed with the carrier first, and then we have a process we have to go through to get my other agents approved for that plan. So they're not approved yet for it, but I can definitely, if you're interested in that, get you on there. If you call in and say, I want to talk to Matt about that, and that's what I'm saying. If you call in or if you email the office or whatever, specify that I need to talk to Matt about that dental plan he talked about on the radio. Right now, I'm the only one that can do that, so you would be coming to me. So a lot of times, if you just call in and say, hey, I need help with health insurance, who's available is who's helping you with that. So back to the life insurance, everybody's favorite subject. Anyways, talking about how much life insurance do you actually need? And I said the common rule of thumb is 10 times your annual income. But that doesn't account for everything else. So the other thing is, you have debt, you have dependents. So if you have a mortgage on your home, so you can include, that amount. So if you have $250,000 or $400,000, on your mortgage, that can be added to, the amount of insurance you need. So remember I talked about, if you made $50,000. And your 10 times your income then was $500,000, so there's $500,000. And say your house is worth $400,000, your mortgage is $400,000. Well, that's close to another. So you could justify right there saying I need $1 million policy, and then how many dependents you have that you're going to have to pay for college education. So again, you can add those different things to your estimated amount of insurance you need. Human life value. What's your lifetime earning potential? And sometimes when you put in for a certain amount, they will ask, especially if it's a large amount, the insurance company's going to ask, okay, how did you determine that's how much life insurance you should have? And you have to put, you have to fill out your assets. You have to put, how much are you expecting to spend for education? What's your lifetime earning potential? Say you're, and I use the example, you're earning $50,000 in today's world. That's not a big income. It used to be, if somebody made $50,000 a year, boy, they were doing really well. Now that's probably below average for the earning potential of most people. And then it could be a matter of maybe you're in a field that you're still like in an apprenticeship and making $50,000, or you're a tradesperson. You're working as an electrician, a plumber, and you're working for somebody, heat and air specialist. Your earning potential is limited to how much you're going to get paid on that job, but you could also say, well, I'm getting ready to start my own business, and instead of making $50,000 a year, I'm expecting to make $250,000 a year. Well, now you could justify getting, say, a $5 million policy. So it really comes down to, what do you need? How much coverage do you need? How many the more children you have, the more life insurance you need, because your spouse is going to be very much in need of your income if something happens to you. The other thing is, a lot of people don't think about the fact of you're the breadwinner, and so you get enough insurance to cover your spouse if you pass away. And they don't think about the fact of, well, maybe your spouse is a stay-at-home parent or works part-time, and because you're the chief breadwinner, but something happens to that spouse, now you have to hire people, depending on the age of your children, you may need to hire someone to take care of your children, whether it's just, getting them to and from school every day, which, your spouse is now doing. There's a lot of expenses that can come up. So it does make sense that just because you're the one that's the main breadwinner, you're not the only one that needs life insurance. Your spouse needs life insurance too, because you're going to have big time expenses and a lot of things to deal with if you lose your spouse. And then, like I said, so how many years are you going to need the income replacement? How many years are left on the mortgage of the house? How soon are your kids going to be going to college or leaving the house and going out on their own? So you're not supporting them anymore. So those are kind of some of the considerations to take into place, how much life insurance you need. And a lot of times what we'll do is we will ladder policies. So say you need, we use that $500,000 to $5 million. So let's just start with the $5 million. So kids are all young. House isn't half paid for because you just bought it 3 years ago. So, the payoff of the mortgage is more than what the balance is right now. I say the payoff is how, as you pay over years, that that $400,000 mortgage, you're going to pay $1 million on it, and I may be exaggerating. Don't get mad at me, my real estate and mortgage friends, if I'm butchering that. But if you've ever looked at it, anytime you get a loan and you look at the total payoff, and it seems like it's like 3 times whatever it was, especially like a 30-year mortgage, you're about all you're paying in the first 10 years is interest. Which, a little side note, if you can add a little bit to your mortgage payment, and I always encourage that on a car payment too, round up. Round up your payment a little bit, whether it's just to the next $1, the next $5, the next $50. Any increase you put on that payment, you're going to pay it off sooner because you're paying more interest. You're paying more principal because you're paying beyond just paying the interest. So just a little side note there of, paying off debt. But so you're going to need $500,000 right now, and then 20 years from now, you probably still need about $250,000, and then after that 20 years, you maybe just need $50,000 of insurance. So you might do something like get $250,000 of life insurance for and again, I did that backwards. You do a $50,000 life insurance policy for 30 years. And then you get a $100,000 life insurance policy for 20 years. And then you get $350,000 for 10 years because you want to cover that first 10 years when the kids are young and you're paying that much on the mortgage. You want that big amount to come out then. Another thing is you can do is actually have your life insurance stretch a little further, which actually helps a lot of families, is don't just have the whole benefit payout as a lump sum. You can set up an income benefit on that. It works kind of like an annuity of when you do the exercise, they file a claim on the death benefit, they may get again, we use that example at $350,000. So get $50,000 up front. That covers all the immediate debts, and then start having a $2,000 or $3,000 monthly income. You'll actually get more life insurance benefit, and sometimes the premium will go down from the total benefit amount because the insurance companies, hey, they're holding on to your money a little bit longer. They're going to be willing to give you some breaks, and you'll actually get more than what that total policy is. So that's a great amount there. Now, of course, and we're out of time. I was watching the clock, and it got away from me. So anyway, until next week, keep listening. Grace 107.7 to Insurance Matchmaking. So some of this I may have to continue on another program. I didn't cover everything that I was going to about life insurance today. So talk to you next week.
You've been listening to Insurance Matchmaking with Matt Libby, your path to health, life, and Medicare coverage with Matt Libby Insurance.